Now, time to judge which is the best and which is the worst. Again, the lens that I'm using is which companies have momentum, good revenue growth. They have very good valuations, they're discounted, and it's a really good time to consider an investment in one of these stocks. So let me go over the best to the worst. Salesforce, in my opinion, is a really good opportunity. It's really a discounted stock and they have momentum. They have good growth. It's a big size software company and they have a potential to really take on the AI area as a new business. Adobe's in the same boat, highly discounted, and it's has good momentum. It's growing nearly 11% per year on a big number. And I think they could have a pretty substantial AI business. The other company that should always be in the conversation is Microsoft. Really keeping an eye on Microsoft. If it dips at all, really having Microsoft shares is always a good idea because it's such a great business. DocuSign is a good consideration. They've been sold off this year, so the discount's gotten better on DocuSign, and that would be the fourth company I would consider in the best category. And I'm working from the best to the worst, so DocuSign would be the fourth best. Zoom is highly discounted and really a nice value stock. If they can increase their growth, this stock's really going to move. So this would be the fifth best. Moving to the sixth best, it would probably be SAP. It's a company that is growing. It's priced a little too high, but if they have a nice dip, that would be a stock worth considering. Intuit's always overpriced, but boy, it's just a really good, stable, safe stock in software. Although it's performed really well over the 5 year, I don't know that the future is going to be all that great for them. ServiceNow is priced too high, but it is a good business. They're growing really well. So if it has a dip, it'd be a good consideration. MongoDB is too expensive. The stock is priced too high, and it would need to have a pretty good pullback. AI Path is actually has a pretty neat business model, but the lack of sales growth is really concerning. And it is priced at a pretty good stock price, pretty high stock price. So I need to see that AI Path is actually going to start growing and being a big player in the whole agentic AI space. Snowflake is, I think, priced way too high. I think that there is a necessity for what they do, but just their stock price is priced too high. The PE ratio is way too high. And the worst investment that I could make in software is buying into Figma. Who knows what this stock's going to be worth? It may be worth 25% of its current stock price. The stock price may continue to fall. And that's been the case with a lot of IPOs. So I think that would be the riskiest, scariest stock that I could buy within software. So I covered a lot of ground in software, but overall, software companies tend to have a lot of desirable aspects. The gross margins, the free cash flows, the valuations always look good. And the market right now has sold off some of these stocks like Salesforce, Adobe, and provided some opportunities. So that's my review of software companies. Hope you found it interesting.